as it sits in the world of exchanges, how do you actually view the health of the parish of market structure?
So at the moment, the parish is looking in good shape. We've got some further challenges. Paul Tucker gave rise to it recently, his paper. Some of the challenges are the success of the exchange groups, and we can talk about which segments, whether it be trading, whether it be the clearing or the settlement or the market data.
Are you saying that exchanges and financial market infrastructures need to be more responsible about how they license products for other purposes? I mean, in the case of LIBOR, it wasn't really a case of licensing per se. I mean, how can you expect, or do you expect, the financial market infrastructures to be responsible for ultimately every possible type of end user? Because that's surely impossible to police.
It's unquestionably, it's not the responsibility of a financial exchange to produce a product and then ultimately police every instance in the way it's used. Now, that whole concept shifts the mindset. It means that profit is good, growth is good, and let's face it, employing people at the moment is a very good thing to have done. But it's also that there's an element, and it's going to be very difficult to identify how you judge it, because it is a judgment, but an element that says, how are you being responsible in what you're doing? I really am impressed with the work that the London Metal Exchange have been doing around responsible sourcing of base metals, because that is a really tough one to try and cover in a wholesale market. That is incredibly difficult. But those same lessons, and we saw with the OECD responsible sourcing and LBMA with the responsible sourcing of gold and so on.
You mentioned several times this whole burgeoning new area of cryptocurrency and crypto assets. Talk us through that for a moment as to where you see that fitting in.
Let's look at what's happened with payments. If you go back 10 years ago, I would always have walked around with notes in my wallet. I would have notes in favor of using my debit card and in favor of using my credit card.
Mm-hmm.
Roll forward to now, and in fact, just look at the change from 14 months ago to 2 months ago, when we had the real impact of COVID coming through. Financial transactions which were paid contactless were more than doubling in terms of the percentage of financial transactions that were going on. If you look at the number of transactions that are going through the RTGS system, it's 98% is wholesale and only 2% retail. And yet the retail market is moving almost exclusively across to digital payments.
So if you've got to gradually move these things up, does that mean, therefore, you see the token asset architecture as being potentially the architecture that may be adopted by the legacy exchanges in due course? Or do you see that as a new thing which will spur out its own kind of business in its own way?
I think you're going to get both, because I think the first thing is this is the testing ground of a new innovative way of trading platforms evolving, and it's being done with an evolving asset class for which the regulations are not necessarily in place, nor is the legislation. We saw the same happen with MTFs over here, whether it be turquoise with Eli Lederman, whether it be Chi-X into BATS, and then SIBO, a whole range of Equiduct has had several different ownerships. Now, all of those have actually been more or less with the same asset classes that they've been looking at. The difference here is that we're going to have new asset classes. I mean, I worked with the Royal Mint on looking at how you could create a blockchain service for gold. That was a digital gold representation, which was Royal Mint gold, and underlying that was physical gold itself. And that was in a relationship that the Royal Mint had with the CME. And you see that elsewhere as well, Patrick, where you've got the exchange groups working with other participants from slightly different markets, where they be commodities markets, to look at how they could leverage technology. Euroclear and Paxos were working together to look at what they could do. This is public domain with gold, the gold blockchain, and the purpose there was again to try and see if they could do it. But look at those are different asset classes, and seeing how it could be the trial ground and the testing ground for the more traditional marketplace. And I think you'll see the same happening with digital assets, and some of those digital assets will become hardcore mainstay benchmark products of the future.